traders, Nick Shaheen here, getting fancy with the intros. And if I did do it, it was a little bit of Avenge Sevenfold. All right, so this is not what I wanted to talk about. Netflix is what I wanted to talk about. Somebody just asked me about Netflix, and this is something I traded yesterday on the long side as a trade, and I closed it today, and I'll tell you why, but I'm still open to more upside. So I did lose a little bit on the last breakout potential that failed. Now this is a daily chart, so we should be looking at a year worth of data. A huge debacle here from the highs, but even just now it's barely flattish for the year. So it had a 40% upside that they gave it all back. This is the Christmas crash. This was the reason why I bought the calls yesterday as a trade, because it's into the Christmas crash support, and the rhetoric was so negative, sentiment was so negative, and I thought, where are they going to get the incremental seller? So I took a flyer on it. It was a decent win overnight, but what now? So here are the drawings that I had on it. And every time it had a squeeze, then there was an upside or a downside scenario. In this case, it did the upside and the downside. And here there was a squeeze, there was an upside and a downside. In this case, it went squarely down. And it exceeded my expectations. But my expectations was just an eyeball based on this cluster. If I wanted to get technical with it, this should have been my buy point, saying, okay, 260.5, 260 should have been support. All right, so how do I decide from here? This, unless I fundamentally like Netflix, this is not an obvious entry point from this perspective. I have to change the time frame for it. So if I go to a 15-minute, now I have a clue. So if I booked a little profit off of this, then I'm okay waiting it out. The next time I want to buy it, I'll have to wait at least for 260.6 or higher, which was the failure of this candle right there. Or, let me see if I can zoom in a little bit. Or better yet, above this one. Because this looks like cup and handle. But there are some notes to that. The markets are open, so I have one eye open to this left. All right, so this looks like a bowl where the bears said, let's sell it off. And the bulls say, well, let me pull it back up. And then another effort by the bears still ongoing. If this happens and they hit this level again and they exceed it and then they drop down to it to establish it as a floor, then they could have a rally about this size. So eyeball somewhere around here, eyeball. However, there's this little cluster, which is on the 15-minute, given this span of time, which is from the 17th on. Today is the 25th, by the way. Should be resistance, because it's a point of control. So whoever fought over it in this cluster will fight over it again. More so because it was a ledge. They tried to make a stand. They did it, and then they tried to make a stand, only failed miserably, right? So they're likely to fight it out. So this is a level of resistance. This would be a level of resistance, and this is definitely a level of resistance. Well, where's the carrot? This gap. So will it get there? I don't know, but there's definitely like a failure level here. Definitely are with two lines right here. So I would chase it back up, but I want to see 260, 250 taken out. Now, fundamentally, Netflix is not cheap. It sells at probably 9 times its sales. I'm going to guess. The PE is hard to gauge, is obviously astronomical as far as pricing yet. 7 times sales, which is more than double that of Amazon. But I think there was some off-book issues. I'm not sure. Like off-book commitments to films that doesn't show up on the balance sheet as a liability. But anyway, we're talking P&L here. So fundamentally, it's up to you to decide whether you like this company or not. I think a lot has to happen in its favor in order for it to succeed as it is right now. So this is, I'm going to take off all the lines. This is what it looks like. So this is the Christmas crash on a weekly chart. The next pivot line, something happened here that told investors, oh yeah, we priced it way wrong. So 220 sticks out. This level sticks out, 201, 180. I'm not calling it down there, but onus is on the bulls to prove, and they can get the help from management. Where? Right here. Next earnings report, Mr. Reed Hastings better get up and say, you know what? We have discounted our competition for, for a while. He was saying he had no competition. He was competing with sleep, and then he was competing with games. And now there's Apple, Disney in his face. I think Comcast, AT&T. Hello, your competition is the rest of the world. Everybody's doing what you started. Thank you for starting it, but everybody's doing it. Now, his only ace in the hole is the fact that he spends 18 billion or whatever, 15 to 20 billion a year on content. So I don't think Apple at $5 a share, a family for their streaming are going to be able to develop content that would compete with that. So I think, my personal opinion, not fact, my opinion, the only ace that Reed Hastings has to spike the stock up, either turn a huge profit somehow, or really the one thing that I think people are looking for is overseas global expansion. Did they beat the estimates on signups and the churn? Like, are they losing faster than they're gaining? And if they're gaining, are they gaining at expectations? And is he going to turn it down? If he does, then it's this going to be ugly. I mean, we're talking like ugly. 160, doable. Not calling it down there. I'm saying if he comes out with a turd like this one, this earnings report, this could repeat. There's no reason why it wouldn't. It doesn't have fundamentals below it to support it. Like, if you're talking about a company who's already running lean like Apple, then the downside will be a knife people can catch. But in this case, it's running on froth. It's less frothy than a few months ago, but it's still frothy overall. And if he says that the picture going forward, as far as the ace in the hole, which is global expansion, is going away, it's going to be ugly. I don't have any bets on it right now. I did have an overnight long. I'm out of it, so I'm not speaking my book. I'm waiting for levels to break. Breaking below 250, 250 is a tradable event. You can chase it lower on a weekly basis, for example. Breaking above 260, what was the number? I can't remember now. 260, 250 was it? Yes, 260, 250 is a tradable event on the upside, shorter term. This is a 15-minute trade. The other one would be 252 or lower, would be also tradable for somebody who wants to short it. These are active trades. This is a ticker that is not for the faint of heart. It's very emotional. People love it. People hate it. There are more haters than lovers right now, which is a good thing for a stock, right? Because then where's the incremental seller going to come from? But again, the earnings, I would not be long Amazon, Netflix, Freudian slip. I would not be long Netflix with conviction into earnings for fear of Reed Hastings coming out with a less than an enthusiastic picture. This is my opinion.